Hello friends, welcome to Drishti YouTube. Friends, we shall now discuss in this video the economy section of the UPSC Prelims 2026. We shall see all the questions and see why some options are correct, some others are not correct, and see with all the details. Let's begin. The first question we have is about the e-commerce model. Friends, have a look at the question. It says that an e-commerce revenue model where the seller has control over the pricing but not or doesn't keep the products in his stock and instead transfers customer orders and shipment details to a third party supplier who then ships the goods directly to the customer is called. Friends, you must have ordered multiple things from Amazon, Flipkart. What do you see? You order the goods on the Amazon but someone else delivers the product to you. This model is called a drop shipping model, which is what is being asked in the question. So in this question the right answer is A, but let's see the other options as well. You see, the B option is the affiliate model. In this, a business pays a commission to a third party who displays the product and he then delivers or directs you to the given website. Suppose you look at, say, Instagram, you click a link, you go to a given company, you buy a product. In that case, you have bought the goods from the main company only, but you have delivered to that, you were directed to that website by some third party. So third party who has driven you to that product will charge some commission from the seller. So this is not what is being asked in the question. That's why we would say this is a model but not being asked in the question. The third is the transaction fee revenue model. See, this is a model in which a finance company usually charges an amount, a percent of transaction that takes place on a given website. Suppose you pay someone from a website, but the payment goes through a different third party, say Razorpay or say PayPal. So the PayPal Razorpay model is actually the transaction fee revenue model. Whatever amount you pay on that website of that seller, the seller will deliver the goods, but the payments goes through a different third party. They promote, they facilitate the payments, they charge a amount. So that's a different model, transaction fee. This is not being asked in the question. The D option is the agency revenue model. See, this is a model where a company is not giving a product but say services like SEO services, ad services, AI services. So this is not about the products. So this is also not correct. So the answer becomes in this case A, and we have seen why. All other three options are not correct in this question. Let's proceed to the next question. The next question is which one of the following correctly represents the three key sub indices of the financial inclusion index, FI index of the RBI. Friends, you see, the first thing is what is the financial inclusion? RBI wants people to come in the formal banking network. So bringing more and more people in the formal banking network is called financial inclusion. Now how does RBI would measure that people are coming to the banking network or not? So it has devised an index called the financial inclusion index, which has three parameters, right? They are actually access, usage and quality. Let's talk about what are they. See, we can bring a person to a banking network for the first condition that there should be a bank in the nearby or the vicinity. The first thing to have inclusion is the access to a bank branch or ATM, right? So the first condition is access, and the inclusion is firstly based upon the presence of that any infrastructure, any system from where the user can get the banking service. Now suppose the banks have been opened but the people are not going to the bank to get some credits to get the accounts opened. The second phase of having the inclusion is you must have some usage of say any credit card, any debit card, any loans, etc. The third point is that how much aware you are. Suppose you buy a loan but the loan was not required to you, right? The inclusion was there but the quality was missing because you have bought a loan which was not relevant to you, and that's why the third point is the quality of the loan is very important. The quality of the banking is also important. So this third aspect deals with how much aware you are. Financial literacy is measured here. And the three indices, three parameters have three different weightages. The score of this index is a score from 0 to 100, and the score is measured by RBI giving the three pillars having different weightages. Like excess is very important, it is given a weightage of 45%. The second is the usage at a weight of 35%, and the third is the quality at the weight of 20%. So these three parameters, they come together to give you a index, and as the score increases, we can say we have more financial inclusion. In the latest report of 2025, we see a score of 67, which has increased from the previous score of say 64.2 something. So what we see that yes, we have inclusion, and we are having expansion of banking, but you see the banks as per the Niti Aayog may have increased to 90% of the population, but still despite the banking are present, the quality and the usage have not increased. That's why the inclusion index is low, even if the excess may be higher. So this answer, friends, here is C, and we can see other options makes no sense because they are not a part of the RBI's index. The third question, before we proceed, you can access and explore our courses at different exams for the CUET, for the UPSC and other exams. The third question, friends, we have is which one of the following best describes the key objectives of India's Open Network for Digital Commerce ONDC initiative. Let's understand what is the main reason behind such thing. What are the problems we are facing? You see, we have a duopoly in India's e-commerce market, largely led by Amazon and Flipkart. Now, when there is a duopoly, then they will dictate the sellers and the buyers about the prices, about the product they are trying to deliver and showcase on their premises, their platforms. Now, if a small seller is there and the seller is not able to pay the commission they are demanding by the demands made by the e-commerce players, the small sellers may not get access to sell to us. We may be looking for the product of the small seller, which may be selling at a good price, but despite our demand, their presence, the intermediary, the network, the platform may have a duopoly, they have a monopoly, which has to be broken, right? And that is why the government has launched ONDC platform, which means it is led by and launched by the Department for the Promotion of Industry and Internal Trade, DPIIT, under Ministry of Commerce and Industry. So this platform actually brings all the sellers together, and from this portal you can buy from all those sellers which are available on the internet. They have listed their products. As a result, it breaks the monopoly or duopoly or oligopoly of few sellers on the e-commerce platform. So this is an initiative which is a portal. The portal requires that all the sellers should come to the portal. They must integrate themselves to the portal, so that suppose you are not going to the portal, ONDC portal, so you may be left out. Suppose Amazon is not interested to go to ONDC. When the people are shifting to ONDC and they are looking for the goods from the ONDC only, so they will find all the platforms, all the sellers, and they can buy the best of the product. So the sellers will have a pressure that they cannot dictate the terms to the small sellers. The platforms will have a pressure that they can't dictate the terms to the sellers. They will have to follow the normal business routine processes, and that's why this ONDC is not to permit the government control. This is incorrect. This is not to replace the e-commerce players, rather it is to integrate and bring all the e-commerce players together, so that we can break the dominance of large e-commerce players and promote the interoperability across the networks. And the last, so this is a correct option, but let's look at the other fourth option. It's not that we want a UPI based payment for all the transactions. The payments can be made by different methods. You can choose the credit card, debit card. You can also choose for the cash on delivery. So it's not about the UPI. It's only about to break the dominance of the large large players of the e-commerce. So friends, the answer is in this case C. The next question is, which of the following statements about the UPI and the CBDC, central bank digital currency, is not correct? Friends, let's first look at the difference of the two things. See, we have a bank account, we need to make a payment to another account. We may need a third party as an interface, a third player as an interface that will facilitate the payment from one bank to another, right? That interface is the Unified Payment Interface, UPI. They are only the intermediaries between the two bank accounts, right? One thing. Second thing is, what is a CBDC? Friends, we do have a paper currency. The paper currencies have a lot of issues, like they can be replicated illegally, we call them the fake currencies. They have a wear and tear, they have a risk of maintenance, they have a risk of carrying. And the very broad issue also is that international transfers is very difficult. So the RBI has launched a central bank digital currency, which is nothing but a digital form of the paper currency. It serves all the same purposes like a physical currency. The process to get into this currency is you have to download a app from a bank in which you have account, then transfer money from your bank to the digital wallet. So amount gets deducted from your bank account and goes to the CBDC wallet in a, say, digital currency format. Now you can make the transactions from your wallet to other wallets having the same feature. So this facilitates the transfer of money between two wallets, right? And that's only it's RBI controlled. It's RBI controlled. RBI is like RBI controls and monitors the physical currency. It's also controlling and monitoring the digital currency, which is nothing but you can say a photocopy of a paper currency which is stored digitally, right? So let's have a look. UPI is a real-time payment system, but a digital currency or rupee is like a sovereign paper currency. That, friends, this is totally correct. It's a true statement, because this is what I have just told you, that is nothing but a photocopy of a paper currency stored digitally. Second, in case of UPI, settlement for end users happens instantly, as the money gets immediately debited or credited. But in case of the digital rupee, there is no settlement, as the wallet balance get transferred to another wallet. Friends, you see, the point is, whenever we have a bank, right, you have a money in the bank, the money in the bank is the bank's capital, the money is a kind of bank loan which the bank has taken from you. When you transfer a money from one bank to another to UPI, the banks need to settle the transactions, because they have now lowered their credibility or lowered their burden, because once you withdraw money, their loans from you has reduced, right? So the banks must settle the amount between themselves, because the payment is now debited from one account and gone to the other account, right? One thing. In case of the CBDC, it's not there is no currency in the physical form, right? Because UPI is actually a transaction for a physical currency. CBDC has no physical currency. That is why it's not like a settlement like the UPI, right? It's only a wallet balance gets debited and, say, credited to other account. That's why this is also correct, because there is no physical currency has to be moved like in the UPI in case of the CBDC, right? The third is, see, in the UPI, right, your money goes out from a bank and comes to a bank. That's why all the transactions are in the bank, say, ledger, the bank's statements. But in the CBDC, what happens is, once you have sent money from your bank account to the CBDC wallet, now that transaction is in the wallet only. The wallet to wallet transactions are not in the bank statement. That's why we can say UPI transactions are recorded by the banks and reflected in the bank statements. But in the case of digital rupee, no data is captured in the bank statement. That's true, because it's now between wallet to wallet, because the banks have given the money to you in your wallet. Now that money transaction, and suppose your bank has shifted your money and you have shifted the money from the bank to, say, wallet, 100 rupees. 100 rupees now are being transferred between the wallets. That's not a part of the bank transaction, because that's out of the bank system. So this is also true. But friends, you see, all the money that is published, issued, has some liabilities of the establishments like RBI and the banks as well, right? So this is incorrect because it says that in both the cases the liability lies with the users and the respective banks. It's not correct because see, CBDC is nothing but a digital form of the paper currency. So in the same case, in the same rupee, RBI has total liability. If the money is not getting you something, you can go to RBI and ask for a compensation because every currency is a liability of RBI. So that's why in this case this is incorrect, but this is the right answer because the question is about which is not correct. The answer becomes, friends, D. The next question is, which of the following statements about the real world assets RWA tokenization are correct? Friends, what is the tokenization? You see, suppose you want to buy a painting, right? You want to buy a monument, you want to buy, say, any historical good antiques, right? So it's not possible to buy say very big property, big monument or big, say, antique or say a very costly painting, right? But we would like to have, say, a share of money in, say, the painting of Mona Lisa. What we can do is we can convert that world assets, physical assets, into some tokens. The tokens will represent a unit having a value that is backed by the world assets. Suppose there is a painting of 1 lakh rupees, right? And we have generated 1 lakh tokens having a value of rupee 1 each. As the year passes, the painting goes very costly. You see, you have heard, must have heard that in the last few days, a very old painting was sold for 175 crores, right? So paintings, they get costlier, they got very valuable over time. So suppose you have bought a paintings token for 1 rupee today, in say next 10 years, the painting may be, say, of double price and the token will be of your double price. So it's a kind of investment people can make in the some assets without actually buying the assets. So that's the tokenization, right? So the question is, which of them are correct about the tokenization? See, tokenization is the process of turning real world assets into digital tokens using a technology called blockchain technology. That's true because blockchain will help any prevention of fraud in any fake tokens, right? Any transaction will be converted to a block and added as a chain. So the fudging of the data is not possible in the blockchain. That's why the first statement is true, that by the RWA tokenization we can convert any asset into a token and the token can be traded like an asset. Friends, the tokenization of the assets offers access. You can buy and sell tokens through various apps. They are there, they provide you tokens, so you can buy and sell tokens round the clock. And when you go to the tokens, you have a kind of a banking network added to the tokens. You can transfer the money from bank to the tokens and vice versa. Suppose you have bought a token and you see the price have increased, you can sell the tokens after some time. So it also promotes the financial inclusion. That's true. Now third point is, friends, when suppose there is a foreign property, there is a foreign antique, there is a foreign any instrument and the tokens are available on the internet through apps. So Indians can buy the tokens and they can invest into various other forms which were not earlier possible, right? So this will allow the access to high growth investment opportunities. You see, you usually invest into, say, stocks or say do fixed deposits. They all have a limited return options, say 8%, 10%, 12%, but you buy a paintings token, you buy a monument token, you buy any actors, any property, any, say, book. So those tokens have very high rate of growth because they are sold at say very high prices. So you get a very high growth investment opportunity, and in India it's possible. That's why for the Indians this gives an option to buy and invest into very high investment opportunities. That's why this is also correct. The answer becomes, friends, A. So in this case RWA is an option from where we can invest into some alternate methods, alternate systems beyond the FDs, beyond the stocks, beyond the property, and you can get high returns on the investments. So answer is A. Friends, if you qualify the prelims, you will get an opportunity to get the There is a very specialized mains program under the Drishti's initiative, Asmita. So you can enroll after you crack the prelims. Now friends, there is a simple question coming up. A bond whose proceeds are used only to finance or refinance, or a combination of both environmental and social projects is called. Friends, a bond is an instrument by which the bond issuer borrows money from the investors, right? So a bond, if is a green bond, means you borrow money from investors to invest into the green projects. You invest there, you earn money, you return the money back with some interest. A social bond is a bond issued by a issuer to raise money at say some interest to fund into the social projects like the health, education, say primary education, right? So this is a social bond which aims to promote the social development, right, social inclusiveness. Friends, suppose if there is a bond which is both for the environment and for the society, so a system which goes for both of them, right, will take the country for a longer duration ahead. There is a sustainability in that bonds, because the two things will be something which will be caring of the economy for long. That's why we can say a bond whose proceeds are used to finance the both social and green are called the sustainability bond, because they lead to sustainability in the economy and the country, right? So this is true. This is, friends, not correct. This means actually that a bond which is issued by the government. So sovereign means the government, right? It represents the government. The government bonds are actually the sovereign bonds. For example, we have a sovereign gold bond, right, issued by the RBI, right, through banks invest in the gold without buying the physical gold. So answer here is C. The next question we have is about the MSME. Friends, which of the following statements about M1 exchange role in the MSMEs are correct? Friends, MSMEs actually are the enterprises having small revenue and small investments, right? Now what happens is when they sell the goods, right, the buyers make payments say with some delay, 30 days, 45 days, 60 days, right? But they are the enterprises, they are in the short of money, they need money for the next order to pay the salaries, right? So we have a system called TREDS. It means the trade receivables electronic discounting say system TREDS. It's a platform, right? In this platform what you can do is, suppose you have sold a good to a say buyer, right? You have got the invoice, the payment is not yet made, right? You upload your invoice on the TREDS portal, right? This portal will have the access by many banks and the NBFCs, right? They will see your sale, right? They will give you that money instantly because they now accept that you have yet to get the payment, and they will take a kind of guarantee for your say sale, right? So in this portal you actually upload your invoice. NBFCs, they will give you money, but they will charge some say interest for the same, right? Now what they do is, when the time comes for the payment from the say buyer, the banks will get the payment from the buyer directly. So as a result, the seller, the MSMEs will not have to wait for the buyer to pay after say 60 days, right? So this promotes the ease of payment to the MSMEs. They are not say in the cash crunch, because now the banks are there in between. They have paid the MSMEs, of course, for a simple charge, for a single say interest, and they will get the money from the say buyer directly. So this is a portal. So M1 exchange actually is a portal for MSMEs, which is not a kind of a collateral based loan. It's not about the loans to MSMEs. It's a kind of a, it promotes discounting of the invoices, right? So this is a kind of a discounting that suppose there's a invoice or say having 100 rupees of the goods to be sold, right? The banks have given the MSME say 98 rupees, right, at a discount of 2 rupees, right? So 2 rupees actually is the income of the banks because they have given 98, but they will collect 100 from the buyer of the goods. That's why the TREX portal promotes the interest of the banks NBFC as well as MSMEs get instant prompt payment without any delay. They can continue their business operations. That's why it's a portal to facilitate the discounting of the invoices. It's not a credit rating agency, friends. We have different bodies, CRISIL, ICRA, Brickswork. They rate the MSMEs but not the M1 exchange. That's why this is incorrect. This is incorrect. Answer is B, 2 only in this case. The next question is, which one of the following describes the crowding out effect in the context of fiscal policy? Friends, you see, in the budget, the government at times have very high fiscal deficits, right? They they create a spending of say 10 lakh of crores, but the receipts from the taxes are only 6 lakh crores. They have a deficit of 4 lakh crores. So the government actually goes to the banking system to get money as a loan to fund their say expenditures. So government has got to the banks to borrow 4 lakh crores which were their deficit, right? Now if the banks have a limited amount of money, if they have given that money to the government as a loan to finance their fiscal deficit, the money supply in the economy by the banks for the private sector is reduced. As a result, when the money supply is reduced, interest rates increase, and as a result the private sector is affected. They don't get the enough credit for their own businesses. That's why when too much of people chase too less of money, it is called crowding out. And in this case we see the first statement is a situation where private investment increases. No friends, the private investment decreases because the government has taken a lot of money and amount left in the economy is very less for the private sector. So private cannot make investment because the government has taken a lot of money for themselves, right? Second is a situation where government borrowing leads to high interest rates. This is correct because this is what we have just seen. The government borrows a lot of money, there is a scarcity of money, the banks increase the interest rates, the private sector is affected because the money is not there for them. That's why answer here is, this is correct. Let's see the C option. It's not about the increase in taxes. It's not about, it's incorrect because in this case the government spending will have impact on the demand, is it not? The government pumping money in the economy will lead to what? They will lead to increased demand. So this is incorrect, totally this is incorrect. Answer is B as the right answer. Friends, you can enroll for the courses. We have multiple courses and multiple options. The next question is about the insurance in the aviation sector, right? This you can see is actually based upon the last year's Air India plane crash, right? The first statement is aviation hull. Friends, let me just explain the background of the question. When the crash took place of Air India in Ahmedabad, see, lot of lives were lost and it created a responsibility on the flyers, the companies as well as the multiple bodies as to who will compensate the families and the dependents of the victims. You see, the aviation hull, hull actually means the whole structure of the aeroplane, including the base, the wings and the equipments installed within the airplane structure. So hull actually means almost everything that is representing the plane structure, right? And when we have international travel, right, international travel has risks, and that's why there is a Montreal Convention, right, of 1999 which says that only in the case of international travel, if there is a say loss of life, there is a crash, there is a delay of the baggage, there is a loss of the baggage, the passengers have a right of claim on the airlines, and the government of the country where the whole event took place will have to enforce the liability on the sector, on the airline flyer, right, airline companies. In this case, aviation hull insurance covers the physical aircraft including the body, engine, on board equipment. Friends, this is totally correct because this is what the hull means, that it's about the total structure of the aeroplane, right. And under the Montreal Convention of 1999, in which as of now nearly 140 countries are the members including India, so they have to pay a compensation to the victims. It is say nearly capped at 1,50,000 SDR. One SDR is based upon the value of 5 currencies like the dollars, yen, yuan, renminbi and pound. So one SDR, you can think that you can feel that one SDR is nearly equal to say $1.6, and it varies from the currency rates. But as of now, up to 1,50,000 nearly SDRs are to be paid per passenger in case of the damage, and some lower compensation are given for the loss of baggages as well as the delay of the planes. So this is, friends, correct, because in this case for every deceased passenger, his nominee and the injured passengers are to get the compensation under the Montreal Convention and the protocol that follows. In this case, both of them are the correct answers. Answer is C. The question is, what is the crowdfunding? Friends, the funding from the crowd, from the people, group of people, is called crowdfunding, right? See, MSMEs actually, they suffer from the funding. We saw, we had a question before. So government, SEBI has introduced that they can get funding from the people, and that too for the, say, those companies which are largely for the non-profit organizations, right? So crowdfunding is the solicitation of the funds from multiple investors through a web based portal, right, for a specific project. Suppose there is a project which is largely social or say environmental or say economical as well, and if the investors are ready to fund, so the MSMEs can say crowdfund say 1,000 rupees from say thousands of people. They can generate up to 10 to 50 lakh of money to fund a given project. So SEBI regulates this funding, and this helps to bypass the rigorous, see, the other systems are IPOs. The companies, they launch IPOs, it's a very long process. You have to create a lot of documents to SEBI to get the IPOs done. So the rigorous procedures are bypassed. Suppose SEBI allows you to crowdfund money, so MSMEs will have a breathers, have a comfort that they can start a project, they can pool money from 1,000 people without very rigorous procedures, as well as they will lead to execution in a faster manner. So the answer here is, friends, it's a very simple and a very factual question. It's about, so answer here is both 1 and 2 are correct. But this question has little issue with the answer. Let me explain you the question. This is about the name of the committee that was formed in the country, as well as the functions or the results they have given. Anand Malhotra committee, friends, was set up, right, nearly in 1994, right. The purpose was for the reforms in the insurance sector, and after the committee's recommendations, we saw establishment of the IRDAI, the regulator for the India's insurance sector. So this statement is correct as of now. He was the former IAS officer, he also headed the RBI, so it's a very well known committee, right. The second is the LC Gupta committee. Friends, this came again in the 1990s, and he recommended the separation of the cash and the derivative section in the stock market trading, right. So we have a cash segment when we buy stocks on the cash, other is the speculation, the derivatives, right. So separation of the cash and derivative was recommended by LC Gupta committee. So this is also true because SEBI was actually in this case there. Now you see one more thing. Urjit Patel committee was found not for the housing sector. It was actually created for the monetary policy reforms under the recommendation. We saw the creation of the monetary policy committee, right, which now decides the various rates like repo rates, right. So this is correct, but this is not correct, right. Friends, in Andhra Pradesh, it was found that in the year 2010, microfinance companies are charging very high rates of interest from the poor peasants, poor farmers. So to check this practice of say loot of the poor people by the microfinance companies, institutions, in 2010 we had a YH Malegam committee, which is actually true in this case, right. Friends, technically we can say that these three options looks correct, but answer is not in this case. So the most appropriate answer will be say 2 and 4, because 1 to 4 is not available and 3 is actually incorrect, and 2 and 3 again are incorrect, only 2 is also incorrect. So the best option is actually 2 and 4, answer becomes D. That's the answer here. We now come to the next question, NBFC, non-banking finance companies in India. Friends, NBFCs are those companies, finance companies, which can give loans, but they cannot accept demand deposits from the people. It means that, see, we go to bank to deposit our money, which we can withdraw whenever we have a demand. That is demand deposit. So NBFCs can give you loans, but they cannot accept demand deposit. They can of course accept time deposits, right? Some long-term deposits like LIC, housing finance companies have some schemes, right? But only limited companies have an option to accept the time deposits for a long duration, but no NBFC has a right to accept demand deposits. So we can say we have to see which of them are correct, right? So it's true that NBFC can't accept demand deposits. That's true. Second, all NBFCs operating have to be registered with us. See friends, it's not a rule. Those NBFCs having assets of say more than 1000 crores or NBFCs they accept funds from the public have to register mandatorily, but not all NBFCs are required to be registered. That's why this is incorrect. Friends, you see, NBFCs, like any NBFC you take Mahindra Finance, Tata Finance, you take say Muthoot Finance, they all have bank accounts in the bank only, right? The bank NBFCs hold their money with the banks only. That's why they can't issue the check drawn on themselves. The checks are issued by the banks, or the banks are a part of the settlement system, not the NBFCs. The banks will be a intermediary between you and the NBFC, right? So NBFCs can't be a part of the payment and the settlement system, right? The checks will be of the banks. NBFCs are just the customers of the banks, right? So they are not a part of the payment and settlement system. Only banks can be a part. Friends, whatever money we keep in the say banks, right? Our money, demand deposit, time deposit are secured in case of bank failure. It's called a kind of a deposit insurance, right? So there is a corporation under RBI which secures your deposits up to 5 lakh rupees, right? The bank deposits up to 5 lakh rupees are secured or insured under a insurance company, DICGC, Deposit Insurance Credit Guarantee Corporation. So this facility is only with the banks, because banks hold your money, not the NBFCs. NBFCs only are an intermediary or kind of a system. You will pay to NBFC, the money goes to the bank in their bank accounts. That's why this is not available to any NBFC, because the money lies with the bank only, even if the money is of the NBFC. That's why the money in the banking system is insured under DICGC. So this is incorrect, right? In fact, I would say, let me correct this thing. This is true because this says that this is not available to the NBFC. It's true. So this is true and this is true. Answer becomes 1 and 4. because deposit insurance facility is actually not available. So this statement is correct here. Answer is A, 1 and 4. The question last we have, friends, is about the multi-dimensional poverty index, MPI. Friends, you see, initially in the post-independence India, we used to measure poverty by, say, income or expenditure method, how much money you spend in a given month, in a given year, in a family. That is a single indicator based poverty estimation. Now we have a multi-dimensional, that the deprivation in the, say, health, nutrition, attendance in the schooling, the sanitation, the cooking fuel, the bank accounts, the maternal health, all these indicators are taken collectively to measure the poverty, called multi-dimensional poverty, and that is the multiple dimensions, they are taken under a method called the Alkire-Foster methodology. It's a kind of a factual part that, yes, Sabina Alkire and James Foster, they devised a system of taking multiple indicators to measure poverty. So it's a true statement. Answer is true. Friends, UN Development Program launched MPI poverty in 2010, right? The UNDP took 10 indicators, like the child nutrition, attendance, cooking health, cooking fuel, and etc. Niti Aayog introduced MPI for India, but they added 2 more indicators. One is the maternal health, other is the bank account. That's why the MPI by Aayog has 12 indicators. That's true. That's correct answer. You see here, this is the indicator. This is the UNDP website, right? So we take nutrition, child mortality, years of schooling, school attendance, cooking fuel, sanitation, drinking water, housing, electricity, assets. 10 indicators are from the UNDP. In the Niti Aayog, what they did, they added bank account and they added the maternal health. That's why this is true, but this is not true because the maternal health and the bank account are not in the UNDP but in the Niti Aayog. So the answer is, this is incorrect. Answer becomes A, 1 and 2. So friends, this is all in the economy section. I hope you would have understood what we have discussed. In any case, please give comments. You can ask questions on the comments as well. We can answer on the questions you ask. Thank you.
For more informative content, like, share and subscribe, and do not forget to press the bell icon to get the notifications.